Hey traders, Leaf West. Another video I'm doing today now on the indicators that I use for intraday trading and for swing trading, what have you. Um, the one I'm doing right now, as we speak, is on my Leaf West trend tracking software. That's what color codes my candles that I use for intraday trading, for swing trading, what have you. Um, I get lots of questions for this, and so I do have lots of, I think, video and blog write-ups on this software, the trend tracking software, in terms of how it works. But I thought I'd update, make an updated video for all my indicators. So after this video, this being the main sort of video, the nuts and bolts of really what I do on my charts, you'll see descriptions of hopefully everything that you'll see on my charts, and hopefully that will explain and get everything up to date for people that are following me, whether I be tweeting or making videos or what have you. So there are a number of colors on on my charts, and I guess what this comes down to is really my sense. If I just double click this, I get off this and I go to a normal version of how people generally look at candlesticks. These are I like candlesticks versus bars, is because I think you can see more easily, more quickly. You can see the what price action is what's happening with price action. So typically, this is what people look at. They look at red candles for down, green candles for up. So, for example, when you have these red candles happening, what is that telling you? Well, it's telling us a move down in price. But really, that shakes a lot of traders out. So I tried to work on a system that looked at the highs and lows of the prior candles, smoothed that out, divided it by a smoothed out average true range, and throw that all together. To make a long story short, try to develop a system that looked at the trend. And I didn't want to be, for example, I didn't want to be. Let's look at this period right here, where there's nothing but green candles going straight up here, basically, right from this period onwards. If I double click that, those red candles that happen here, like, I didn't want to be shaken out of a trade by a red candle. And so I wanted to develop a trend tracking system that allowed me to stay with a trade longer. So I created this system, and I'm going to try and explain it for you guys. So there's various colors, and this is my second version where I did a subtle twist to its original version I had. There's green. So the basic premise is that there's green candles are for uptrends in price, and there's two colors of green. The duller, darker green is for uptrends that are decreasing in strength, and the lime green ones are for uptrends that are increasing in strength. Now, this is an intraday chart, so you'll get more choppiness in an intraday chart than you will on a daily or 15 or 60-minute chart, and I'll show you that in a minute. But these candles work wonderfully well for both intraday trading and for longer based trading. But we'll start with intraday trading with this example or with this video. So again, green is good, right? Green is good. Green is for uptrends. Dull green is weakening strength. Lime green is increasing strength. So obviously we want to see increasing strength. We want to be involved with stocks that are showing lots of lime green candles. On red candles are for downtrends. The duller red is for weakening downtrends, and the bright red is for strengthening downtrends. Again, you don't see it as well there because there's only one or two candles, but on a day like here, you have an uptrend. You went from a downtrend that was strong. The downtrend weakened. We have an uptrend now, and price confirmed. But it's the momentum of this uptrend is weaker than the momentum of the prior downtrend. But now we've flipped to a strengthening uptrend. All right, and here's the opposite. We had an uptrend that was strong, weakening. Now it's a confirmed downtrend. Confirmed downtrend that's strengthening, and so it goes. So that's the red and the green. Now there's um, two colors that I have on my trend strength candles to warn me of extreme trends, whether it be uptrends or downtrends. They do the same thing. There is this light blue candles which you see here at the beginning of the day on Friday for Apple, and there's dark blue. And okay, let's start with dark blue. Dark blue gets painted whenever the trend strength gets above 100. And you can see down here on this histogram, and I'll go over the histogram in a minute, but I want to just go through the colors first so people understand the colors. Whenever the histogram gets above 100, I print a dark candle, right? And overriding all of that, overriding all other candles, whether it be green, red, or dark blue, is this light blue candle. And the light blue candle is just a warning based on price, not on trend, just based on price. It's a warning that price is moving away a certain measurement from the average true range, the prior average true range. So there's two purposes for those light blue price extreme warnings. The first one is when you have a period of consolidation and all of a sudden we start printing these light blue candles. That is a kickoff move. That is a warning to traders, hey, something's happening. We're breaking a tight consolidation and we're moving. That means get on board. So that's a warning to get on board, right? So you can sort of see here that the trend strength was weak right here, was around 0, and all of a sudden, bang, price starts to move, and it's moving quickly away from the average true range. So I get these candles to warn me to pay attention and to get involved. And then the other time, and it happened right at the end of the day, is that when a trend is long in the tooth, like today's trend in Apple was, like you've had a very strong day, and then we get another push higher. That is the same measurement tool. It's a measurement of price getting above a certain historical relationship based on average true range. But when it's later in a move, that's a warning for a top. So the light blue candles early in a move are a warning to get involved, and light blue candles late in the move are warnings to tighten stops. Not necessarily sell, but at least tighten stops. And it works the same for both short and longs. So let's go back a bit here and see if we can see some other light blue candles. All right. So here's a good example for Apple. Apple gap down on this day. This is August 15th. So price gap down. So that was your warning. But assuming this wasn't right at an opening of price, well, that happens quite often because you get these gaps, and the gaps move away from the average true range, so you get these lighter blue candles being painted. Right, so that's the warning that price is moving. Typically, your best bet is to go in the direction of that first kickoff move. Right, then later in the day, we recover and we spend the whole day traveling higher, right? So this trend is well developed, right? And then so when we get these light blue candles, that's a warning that price is getting extended from a longer trend that's been in force. So that's more of a warning of that price will go in the opposite direction of this warning candle. The early move ones are warning that price has just started to move and that you should expect price to continue in that direction. So hopefully that explains the light blue and dark blue. And in version 2 of my software, I put a divergence dot on the blue. So instead of making two shades of dark blue, I just left the dark blue the way it was and put pink dots. So pink dots happen when the trend strength, whether they be an uptrend or downtrend, when the strength starts to weaken. So it's still printing blue, it's still above 100, but actually the trend strength is decreasing. So I wanted to be able to see by looking at that blue candle is not the same as this blue candle. And it's kind of obvious the price is lower than that, but you won't necessarily, when price can be lower than the previous candle and still the trend strength can still be rising. So it's not as obvious as where's price relative to the last candle. You really have to look for these blue candles. So let's just go here, for example. So for example, here was the kickoff move. Here was the trend strength got above 100, right, and started printing. If you looked under these light blue candles, starting from this point onward, they would be all dark blue candles. But again, the light blue candles paint over top of everything, whether it be red, green, or dark blue. And then once the average true range catches up to price, so after a few minutes of extreme price candle warnings, those will fade away and you'll get the underlying candle colors. And in this case, it was extreme trend strength candles, the dark blue. I know it's kind of hard to follow maybe just by the names of everything, but just try to follow along. So here we had a downtrend that was long in the tooth. In essence, that's what the extreme candles measure. Whether when trends get to an extreme historically, which is this level of 100, which we've calculated, that tells me that the odds are that we're going to get some kind of counter trend bounce or pullback in an uptrend, or we're going to get some kind of consolidation. So it just tells you that the trend is long in the tooth, and don't expect the trend to keep going at the same pace that it's been going. That's the layman's version of what I'm trying to say. So when we had the pink divergence dots, the downtrend strength is of this trend is decreasing. Now again, that's a warning to tighten stops and to pay attention that if you're looking for a reversal trade, you can start looking for a signal or a trigger. It doesn't mean that on the first dot price is going to reverse, because an example of what happened here was the strength started to decline, but then it started to pick up again a little bit. But then again, you started to have some more divergence here again, and then you actually flip back to red because we dropped below 100. And this is where you get involved in reversal trades, when you go from the extreme trend warnings back to getting you a signal. So we'll go through signals on another video, but that's what the dark blue and the light blue are. Light blue is price extremes away from the average true range, historical average true range measurement that I use. The dark blue is the trend strength, which looks at the high and the low of a candle and compares them to smooth averages of prior candles and yada yada yada, and compares it to a number of things. But anyways, I don't have to explain exactly how that's calculated, but it does a good job, and we'll see that. So we've covered everything except now for yellow candles, right? So we've done the green. There's two versions of the green, strong, weak. There's two versions of the red, strong and weak. And there's the dark blue extreme trend candles with divergence dots, and there's these light blue average true range price movement warnings. Early warnings are signals to get on board. Late warnings are signals to tighten stops. So that sort of wraps that up. Now, trend strength, again, how I measure trend strength is I look at the highs and lows of a candle, and I compare them to the average true range of the prior ones, the highs and lows. And anyways, it plots this histogram. And when trend strength is rising, whether it be an uptrend or downtrend the histogram is rising, right? And for me, really, it's about the 20 level, right where my cursor is now. The 20 level, between 20 and 0, really, there's no trend strength in price action. So really, when price is down there, most people are getting chopped up. But the interesting thing is that when it gets down to 0, that is historically unsustainable. And therefore, what I wanted to do was to paint a candle yellow when the trend strength gets down to 0 or below, because it does go below. You can see in this histogram that it gets below. When it gets to that point, that's unsustainable. It's very much like my squeeze indicator based on the Bollinger Bands, is that when you get a contraction, contractions can't last forever, and usually you'll get an expansion coming out of a contraction, an expansion that'll move price enough that you want to get involved. Well, the same thing with trend. Usually when you get a trend contraction, you'll get a trend expansion coming out of that, and that provides great opportunities to trade and make money. So again, let's just go back a little bit more over this histogram. Again, so okay, so now we got all the colors, right? Yellow is for when trend strength has gotten so low that it's unsustainable. It's like a contraction, and then trend strength will then expand. Green is for uptrends. Lime green, strong uptrends or increasing strength for uptrends. Duller green is for weakening trend strength. Red, the dull red is for weakening downtrends. Bright red is for strengthening downtrends. Blue, dark blue is for trend extreme levels. Pink dots are for divergences, for still extreme, but yet the trend strength is weakening based compared to the prior candle. So that's all it does. It looks at what is my histogram reading. Is it above 100? It's above 100, so it paints blue. And is it higher or lower than the previous candle? If it's lower, it'll print a pink dot above the candle. And the lighter blue just looks at price relative to a multiple of the average true range. And when it gets above a certain level, it paints me it paints a light blue candle over top of everything. So underneath these light blue are greens, and under these ones there's dark blue. But all you see is the light blue, because that's a warning that, hey, something abnormal is happening. We're getting a kickoff move in this is Deere and Company. And so we got all the colors handled, right? So we'll spend a little bit more time on the histogram so you can understand that a bit more. So again, the green portions of the histogram are for uptrends, and the red is for downtrends. So the histogram is only two colors. It's not multicolored, because all it really is measuring is the direction of the trend, and then it plots a value based on the strength of the trend, right? And like I said, 20 is a level where if you're below 20, really you're not trending. Your price is chopping. So if you want to look at it that way, that's how I would look at it. That either price is trending or it's chopping, right? And it goes through those periods. So obviously we want to be involved. Let's go back to Apple. All right. So here is Apple. So here's a perfect example. I thought it was an Apple, but it was on Deere and Company. Sorry about that. So we want, if you look at it simplistically, is that we want to be, if we want to trade Apple long, when is the best time to be involved? The best time to be involved is when the trend strength is green and when it's above 20. So here you can see the slope of the histogram. It's up, 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 up. So we want to be long all through this. And then we don't necessarily want to be short when trend strength is declining, because this is still an uptrend. And the bigger pattern says that Apple is in a bigger pattern going higher. So all it's saying is if you were scalping for an intraday trading perspective, if you were scalping a stock, say Apple, is that, and you only want to be on it when you're making money, and you don't want to sit around when you're not making money, is that you want to be in Apple when the histogram is going higher. You don't really want to have your capital tied up in Apple when trend strength is declining. And then here again, it's increasing, and we cross above 20. So here's where you want to get involved again in Apple, right? And then here we start make a lower high. Again, you don't always go to extreme levels in trend. Every move is different. But again, you want to see a positive slope on an uptrend if you're trying to play something long. And this whole time when trend strength is declining, that's basically chop, right? And that you don't want to be, you want to pick pick a stock that's trending higher, and the histogram is crossing over 20 and moving higher. And this whole time when the trend strength is declining is a time when you're not really going to make easy money. You may be able to scalp pennies out, but really, if you want to hold something for a half an hour, that's what you want to look for. And they're not always as simple looking as this sort of three nice sort of big mounds for the day. Um, let's take a look here at this day, right? Right. So anyway, so here, yeah. I'm not going to spend more time on this, but anyways, what again, the histogram is very simple, and all it does is it measures the strength of the trend. And green is uptrend, red is downtrend. So here you have a downtrend, a confirmed downtrend, but the strength is weakening in that downtrend. So actually, that has to go with how I trade these candles, and we'll go through that in another video. But I really want this video is just going to deal with the colors so people can understand the colors. And I think we've more or less covered that up. But I'm going to show you now this on a bigger chart. So let me just call up and pause this and pull up a bigger chart. All right, this is Apple 15-minute chart, and the candles do the exact same thing, but it's just measured on a 15-minute chart. Here is Friday's action on the furthest right here on the trend strength, and this brings up another good question that the smaller time frame charts, whether it be a 5-minute chart or on a swing trading basis, a 15-minute chart is probably considered smallish. That these charts can, the signals can get overridden by bigger moves. So on Friday, Apple made an all-time high and got squeezed into the end of the day. So the bigger time frame charts, we were breaking daily and weekly and monthly levels. So you can't just say that, okay, I see a extreme trend strength candles with pink dots, and therefore I'm just going to blindly short it. You don't do that. You have to understand the pattern and the bigger charts that go hand in hand with the smaller charts that you're trading. So I use 50-minute charts for my really for directing me when to get involved in a swing trade, and then I use the 3-minute or 5-minute chart to help me enter when I see a swing trade set up on a 15-minute chart. So Fridays was an example from that perspective, but the candles are the exact same thing. So we had this, on bigger time frame charts, the intraday charts, you'll see these light blue candles typically only on gaps. You don't often see those warning candles later in a day, because average to range, price doesn't move that far away later in the day unless there's a news event. So typically that's the only time you'll see those light blue candles. You'll see those light blue candles on 5-minute charts or 3-minute charts through the day when something happens. But typically on the bigger charts, you only get those at the start of the day. And notwithstanding what happened here with Apple on these dark blue candles, they're a wonderful indicator typically of when you should expect a counter trend move. Here is an example of that for Apple. We were making new highs here on this swing higher. We weren't at all-time highs yet, but we made a new push here, and this gave us a great warning here to be aware. Another one here. Another one here. You got to go ahead a bit just to get the data in place. Where the hell is price? Okay. Here we go. I was looking in the wrong spot. You have to feed the data in here and then it color codes. Right, so we had a strong trend up here, and the same thing that happened on Friday happened here, right? And that price basically refused. The bigger time frame chart was taking over, and it drove right through these oversold candles. So when that's happening, you have to realize that, hey, my daily chart or my 60-minute chart. Okay, so what day was this? This was June 29th. Let's go to a 60-minute chart. June 29th, right here. So we had a bull flag pullback on a 60-minute chart, and then price gapped up, and then we started to run. So we didn't get extreme. Once we got extreme candles on the 60-minute chart, that was the warning for the expected pullback. So that just shows you, again, that whole concept of the 50, bigger charts overriding smaller charts. But the principle's the same. The candles work the same for whether it be a 50-minute chart or daily chart or a 60-minute chart. And the histogram works the same way as well. There's the 100 line. Anything above that prints dark blue. Anything below that, all you see is red or green. Okay, so I'll do my next video. I'll do how I use these candles for trading. I'll be right back, guys.